Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. And today we are talking about the top 5 financial reports that every business owner needs to review. And we want to talk about this because as we talk about businesses being profitable, this is how you know the state of your business. And we don't talk about this a whole lot. Like I said, we find all kinds of people that are telling you how to make all the money, what to sell, and all that stuff. But there's nobody really telling you how to really judge the financial health of your business, because it's really not just about how much money you make. It's how much money you are able to keep. Okay. It doesn't make a difference if you make 6 figures. If you go and make $100,000 and you got to spend $90,000 to make it, well, you're not better off than the person that's making $50,000 but keeping $25,000. Okay, so when we're talking about the type of reports that you need to review, this is what we're going to be talking about today. So number 5 is your accounts receivable aging report. Now, not every business will have this. It just depends on how you run your business. If you're invoicing people, if you're providing a service and then invoicing people, if you're providing a product and you have to wait for them to pay for it, then this is where you will have your accounts receivable report. This is basically the people that owe you money. All right. You have different stages, the 1 to 30 days, the 31 to 60 days, the 61 to 90 days, and, things that are 90 days overdue. Because one of the things that will put a small business out of business really quickly is poor paying customers. Okay. Because when you've got more of your money tied up in people who haven't paid their bills, you have less money to operate your business. So it's important to be able to manage those, those customers that aren't paying you. Okay. So that's what you need to know. You need to be looking at that report and saying, okay, 1 to 30, you might have a 30-day turnaround on your bills. You might have a 15-day, whatever that looks like for you. But once you start getting that 31 to 60 days, then you need to be calling and asking, where is my money, hunty? Okay. Get your money. All right. So that's the accounts receivable. Number 2, well, actually that was 5. This is number 4, budget versus actual. Now, when you're getting started in business, you might not necessarily have a solid budget, right? You can kind of guess about what you want to spend in different areas of your business. But then then you got to go back and look at, okay, this is what I budgeted. What did I actually do? Did you overspend in some areas? Did you make more money? You have to go back and look and say, this is what I budgeted and this is what I actually spent. And then ask yourself the tough questions of why. And not only why, but, what are you going to do about it? Right? So if you budgeted, let's say you budgeted $1,000 for advertising, and then you went and spent $5,000 in advertising. Okay, why? And was there a return on that investment? Right? So if you budgeted $1,000 and you spent $5,000, but you made $20,000. Okay. All right. So then you can make some better decisions, but you've got to look at how you are performing. Did you have an increase in revenue? Did you have a decrease in expenses? Like, what does that look like for you? Your budget versus actual is what's going to tell you. And then from your actual expenses, you can then make the next year's budget and then make some different decisions. If you're like, okay, well, maybe I don't want to spend more in this area, or hey, if I spent 5 times more in my advertising and I made 10 times more money, okay, well, maybe we need to beef up the advertising so that we can get more money. But you definitely have to understand the why behind the numbers. It's not just knowing the numbers, but the why behind the numbers. When you know the why, then you can make a better educated decision about your business. Okay. Now, the last 3 I'm going to give you are 3 things, even in the smallest business, that you need to know. All right. So number 3 is the cash flow statement. Your cash flow is essentially how your business is coming into and going out of your business. If you've got money coming in faster than it's going out, you're in a positive cash flow. If you've got money going out faster than it's coming in, you're in a negative cash flow. Now, every business has a positive and negative cash flow month. It just is what it is. If you look at the retail industry, Q4, if you are not in positive cash flow in Q4, you have failed in the retail industry, okay? It's the best example out there. But, the first quarter might be negative cash flow months in retail. So you have to really monitor the hills and valleys in your business to know, okay, when is your boss out season? For tax professionals, our boss out season is the first quarter, right? If you are not in like severely positive cash flow during the first quarter when it's tax season, there is something really wrong if you are a tax professional, right? However, when you get through to maybe the summer months or even into the fall, before people realize that, we got to file these extensions, you might be in a negative cash flow month. So monitoring your cash flow statement, it helps you make better decisions of where you might need to save a little more in order to get through those lean months. But it also tells you when you can also afford to spend a little more, right? When you're in those positive cash flow months. So you've got different types of spending in your cash flow. You've got your operating, you've got, financing that you're doing. You may be investing, but mainly in small business, it's in that operation, meaning having that, the cash available to operate your business. And this is why we set those budgets, because if you look at your cash flow and you're saying, okay, in this particular month, I'm really in a negative cash flow state. So maybe I need to shift some income or save some income to where I can continue my advertising in this month versus really bossing out in one particular month. I hope that makes sense to you guys. All right. Number 2 is the income statement. The income statement, also your profit and loss statement, or statement of income. This is where you're really looking at the operational health of your business. And this is something that, like at the end of the year, your tax person will probably ask for your profit and loss statement, because this is going to detail where your money came in and where you spent your money. This is just, a financial snapshot of what your business is doing. So it also, your income statement, your profit and loss statement is also what creditors use to determine your credit worthiness when it comes down to lending. And so when I tell you that, your bookkeeping is important, yeah, this is why, because you have to be able to produce these type of statements, because the lenders want to know that you'll be able to pay them their money back. That's what it is. All right. Number 1 is the balance sheet. Now, I want to talk a little bit about the balance sheet because we don't hear about it talked about too much. And so the balance sheet is different from your cash flow and your income statement. Your balance sheet shows you your businesses, your assets, and your liabilities. Okay. And so what you, and also, shareholders equity, if it's just you, it shows you your equity in your business. And a lot of people most people don't even know what a balance sheet is and really don't take the time to look at it. And also because a lot of business owners don't have bookkeeping in place, they have no idea. So when you go into debt to start your business, you have then created a liability for your business. And a lot of people don't get this. We just go, we swipe this credit card, we're going to buy whatever we need, right? And not really taking into account that you have really, what you've done is created a liability for your business, even if it's not in your business's name. If you go and swipe your credit card to buy something for your business, you have created a liability that your business really should be paying off. And so your balance sheet lets you know if what your debts are, what your assets are. Like if you have like an inventory of product, that is considered an asset that you can sell to generate more income, right? That could be an asset. But your balance sheet, it really, it again is one of those other financial snapshots to let you know how much debt is your business carrying? How much equity do you as an owner really have in your business? Equity is that difference between what you owe and your assets, right? How much equity do you have? You think about your house, right? If you own a home and you financed X amount, but you've paid off X amount, well, then you've got equity in your home. And this is why people try to go borrow against that equity. That's a whole nother show. But that's what it is like, how much of your business do you really own and how much of it is actually debt? Okay. And I think if we learned more about balance sheets and tracked those liabilities more, then we'll make different decisions about, before we go buy the next latest and greatest thing. And this financial management for a business, this is what keeps your business alive. And if we think about our businesses more than just as a side hustle, as something that is going to support our lives and our livelihoods, we would take these reports a little bit more seriously and also make better financial decisions when it comes down to spending. Right? Because I can't tell you how many times I see small businesses overspending, whether they're, you might have a t-shirt shop at home, you might have a network marketing business, whatever that business is, you have to really monitor your finances, because this is how foolishness happens. This is how, when you put your money, your business in the hands of, of an accountant or someone else, and you just go to sleep at the wheel. This is how embezzlement and all that other stuff happens, because you're not paying attention. But these reports, you should review them at least quarterly. You should know within every quarter how much money you've made. If you've got to sit there and go, let me go look, you don't know about your business. You should know within a ballpark of how much money you've made and where you are for profit for the year. Okay, so I hope that helps you out in reviewing the finances of your business. And if you're saying to yourself, okay, I don't have any of this stuff in my business, 9 times out of 10, you don't have any type of structured bookkeeping, which I highly encourage you to move into. When you're getting started, I get it. You got, an Excel spreadsheet where you're tracking your income and your expenses. Totally get it. That's fine. That's where you start. It's not where you stay. If you are really talking about being a successful business owner, then these are the things that you need to have in place. You need to have your bookkeeping in place. You need to be able to review these reports, and you need to understand what they mean. That's what needs to happen. And if you don't, then that's when you invest in a consultation to say, hey, explain this to me and tell me what this means. You should be able to ask those questions of the professionals that you hire, and they should be explaining it to you, period. Okay, so I hope that helps you out. Thank you guys so much for tuning in to Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come right here to get your questions answered about your home business taxes. All right, have a great day, and I will see you all next time. Bye.